Hi, this is Kerry Artek with Wicked Stocks, bringing you your daily Apple report for Monday, April 17th, 2023. Before I click on all the charts, just want to ask you to please click like if you haven't already. It does help us out a great deal in being found on YouTube. And subscribe to the Wicked Stocks YouTube channel. You'll be provided notification each and every time new content has been uploaded. Also know that we offer a full array of daily and weekly video analysis on wickedstocks.com, a subscription-based service. You'll receive, the daily Triple Q, the Nasdaq 100, the daily SPY, the S&P 500. Just a full assortment. 2 individual stock picks every week. I could go on and on and on, but I'm not going to. I'm going to jump right into the analysis for Apple. This is the big picture, a weekly chart. If you've been following the Apple report now for months, you know that in January we fell to a targeted zone of long-term support. Then in the low to mid 120s, the areas is still pretty much there. And at the time, we'd mentioned how the 170, 169 channel top should be considered in reach by some point in 23. About a month later or so, we gapped and closed above this meaningful channel top, now at 136.17, then indicating the low 170s within 3 to 5 months. And most recently, a couple of weeks ago, 3 weeks ago or so, 2 solid weeks ago, after some hesitation and two-sided trade, we did firmly then push above what I'm just calling the upper 150s, low 160s, combination long-term speed line and 5/8 Fibonacci retracement AB, the all-time high against January low of this year. And so this picture is worth just mentioning that there is, if you're looking really through May trade, we now have solid support in the upper 150s, I'll call it, the rising speed line at 156.24 and the descending speed line at 157.74. And then we have a ceiling of resistance, the top of which on the daily chart is 170.153. I just showed on the weekly chart how the same formation is 170.169. So you can see that here. And you can see the support here. This area will all converge. 156.24 rising, 57.74 dropping. This will all converge in the next couple of days. This is our floor of support and our ceiling of resistance through May trade. And with respect to 170.153, this is our ceiling of resistance really through the rest of the year. Now, I'm not implying that this will contain an annual high, but it may. And if we close above 170.153 over the coming week, 2 or 3, then we actually have a good low for the year, and we should see substantial gains then through the rest of the year. But I'm not going to go there right yet. So let's take a look at really kind of the day itself. We have this extreme channel top that I had as an intraday resistance last Friday. I'm going to call it session containment now at 165.64. We did push through it. Selling it right now in the midst of a 2 to 3 week buy signal, only well suited for aggressive day traders, I think. But nonetheless, holding below 165.64 does allow this market to fall back to this 160, 176 formation, perhaps within the day. It's not a target, but holding below 165.64, we can grow tired and fall back to 160, 176. On the way down, I have 163.82, which is actually, now that I see that, that is actually Friday's low. And it's kind of coincidental, but not really. I can tell you also that the low from last Wednesday against Friday's high, if you do a 3/8 downside Fibonacci, that is 163.82. So, Apple basically bottomed out on Friday at a very short-term downside 3/8 Fibonacci level. And it's also our pivot point on an intraday basis. So holding above 163.82 right here will keep 165.64 in reach. And inversely, if we break 163.82, or in other words, Friday's low, we can unravel all the way back to 161.76. Just know also that 162.28, I have it as a minor point only. You could begin buying there. That is the 5/8 downside Fibonacci over the last 3 days. 161.76, able to contain session weakness. And if by surprise today we close below 161.76, we should continue south over the next few days into this 156.24 combined with this long-term speed line at 157.74. This is actually a better image of it. So closing today below 161.76, expect over the next 2 to 3 days this narrowing band of long-term support between 156.24 and 157.74, where we could actually bottom out, possibly through May trade, because over the following 2 to 3 to 5 weeks, we can regain lost ground and push into the low 170s long-term resistance, long-term target, where we can top out through Q3, possibly the rest of the year. Now, if we were to close below 156.24, that would be a significant sell signal. No good reason to own the 170 or 172 calls you may have purchased over the last, anywhere from the last few weeks to the last few months. If we push into the low 170, let's talk upside, actually. I think I've covered the downside pretty well. Hi, if you enjoy watching our daily Apple report, you'll love our daily Triple Q and SPY reports. They're presented in the same 5 to 10 minute video format. Our daily SPY and Triple Q analysis provides directional market signals that are correlated with highly specific price support and resistance levels. Whether your trading time horizon is short or longer term, we promise you a distinctive edge in your trading of the SPY and Triple Q. We offer a 5-day, no questions asked, money-back guarantee. So go to wickedstocks.com right now and start receiving your daily SPY and daily Triple Q reports today. Let's talk upside, that in the event we push or open above 165.64, 166.84, the move high in reach. We can top out there initially, but I do think that if we push or open above 165.64, we should push to a new move high today, the 168.69, a simple trend line off these highs, then likely within the day where we can place a daily high. So in terms of the session containment levels, in terms of the day trade, it can grow heavy below 165.64, but then turns bullish above 165.64, expecting 168.69. In terms of the 3 to 5 day swing trade, there's not a lot here to hang your hat on. Excuse me. I do think that the 161.76 level, there's just so much going on down here that it may actually be your opportunity. This could be perhaps beefed up to a 2-star support, 161.76. So if you're more the 3 to 5 day swing trader, you could bottom pick this upper 161 handle in anticipation of bullish rotation then through the rest of the week. And if we close below 161.76, then you're playing the short side. Yes, you're playing the short side very carefully, because you just have another day or two before you need to pull the trigger on covering that short position. This 156.24 to 157.74 region, a significant zone of support. And I'm not quite sure we'll get all the way down there, because I think we're not the only ones watching this. There are funds watching this, resting bids in the 158, 159, 156, or 160 handle, I'm sure. You even have 160.49 as a long-term 5/8 Fibonacci, as you're well aware. So, the buying really begins, I think, in the 160 handle, and not unless we close below 156.24 do I see Apple turning south through the rest of the second quarter, through the month of May, and we'll just cover that at that time. But that's not going to happen today. Let's take one more look at the upside, and I need to mention that if we do close today above 161.89, then we should tomorrow reach 171.69. which is the long-term channel top on the weekly chart that can absorb buying through Q3, possibly in a later year. So this would be profit-taking for those of you who bought it several months ago when we closed above this channel top. I'd mentioned perhaps reaching for the low 170s out of the money calls that don't expire for at least 6 months. And then again, recently, a few weeks ago, when we pushed through this upper 150s, low 160s, I'd mentioned buying 170, 172 out of the money calls that don't expire for at least a month or two. And so whatever strike you may have bought, that would be the profit-taking opportunity. And last thing I'll say, if we push into low 170s this week, you may at that point in time not only liquidate those 172 calls, but reach perhaps for, 158. 156 out of the money puts that don't expire for at least a month. I'd go a couple of months out to preserve delta on the way down, and that would be the next play. So I'm going to leave it at that for Monday's Apple Report. Please click like, subscribe, and check out wickedstocks.com. I'll be back tomorrow with Tuesdays.